We're excited to share a remarkable story of how a couple bought and paid off their $450,000 primary house in just under 8 years. Their story starts in the summer of 2015 when the couple purchased the house for $450,000 with 15% down and a 30-year mortgage at an interest rate of 4.25% and monthly payment of about $2,050. At the time, they didn't have the full 20% down payment, so they had to pay PMI, or private mortgage insurance, of about $150 each month. PMI can be a significant extra cost, so the homeowner's first goal was to eliminate this as soon as possible. A few months later, in summer of 2016, they made their first big move. They refinanced to a 30-year fixed mortgage at 3.5%, reducing their payment to about $1,700 per month, saving almost $325 monthly. This reduced their overall payments and eliminated the $150 PMI monthly payment. During refinancing, their home was reappraised, showing over 20% equity, so PMI was no longer required. This was a smart move because reducing the interest rate from 4.25% to 3.5% made a big difference and reduced their loan-to-value ratio to under 80%. Fast forward to 2017, and here's where things get interesting. The husband joined a public company which offered company stocks, while the wife switched to a better-paying job later in 2019. But instead of spending lavishly, they decided to save and invest in stocks and ETFs diligently. For the next few years, they focused on saving as much as possible. They didn't take many vacations, refrained from unnecessary upgrades to the house, and lived a frugal lifestyle. By mid-2020, the homeowners had accumulated significant savings, and the stock market had been performing well. Moreover, COVID-19 hit, which meant that the couple saved extra money each month by preparing all their meals at home and refrained from traveling. This presented another opportunity. Before the interest rates began to rise, they refinanced their mortgage again, this time securing an incredibly low rate of 2.125 on a 15-year mortgage. During this refinancing, they paid off an additional $140,000 using their savings and income from stocks. This brought their monthly payment down to about $1,550 and the loan balance to just about $239,000, while the original loan amount was $382,500. Despite having a more manageable mortgage payment, the homeowners continued their disciplined approach. Resisting the urge, they held off on upgrading their kitchen countertops. This shows the importance of prioritizing financial goals over immediate gratification. Now let's talk about the final stretch. By late 2023, the homeowners had managed to save enough and used from their company stocks, savings and investments to pay off the remaining balance of about $200,000 in one go. So, in under 8 years, they paid off their $450,000 house. This story is a testament to what can be achieved with careful planning, sacrifices, discipline, and a bit of good fortune. Please watch till the end of the video to look at the key takeaways from this story. Refinancing for lower interest rates. By refinancing from 4.25% to 3.5% in early 2016, and later to 2.15% in 2020, they significantly reduced their interest payments. Each refinancing move required a careful assessment of the costs and benefits. If refinancing isn't a practical option, overpaying on your mortgage principal each month can help you pay off your mortgage faster. Strategic use of savings and investments. The homeowner's ability to pay down large chunks of the mortgage principal came from diligent savings and smart investments. Instead of cashing out and spending, they saved and invested those funds. The stock market's performance between 2017 and 2020 was beneficial, providing substantial returns. When they refinanced in 2020, they used $140,000 from savings and investments to pay down the mortgage principal. This significant reduction in principal meant that even with a shorter 15-year term, their monthly payments dropped to about $1,550. Focus on long-term goals. Maintaining a long-term perspective was essential. The homeowners had a clear goal: financial freedom through mortgage elimination. This goal guided their financial decisions, helping them stay focused and motivated even when sacrifices were needed. Leveraging career opportunities. The husband joined a public company in 2017, receiving stocks which opened up new financial avenues. Meanwhile, in 2019, the wife changed jobs for a better salary, further boosting their financial situation. This move provided a new stream of income that could be invested and eventually used to pay down the mortgage. While not everyone will have access to company stocks, seeking career advancements, investing and creating additional income streams can significantly improve your financial health. The homeowners took advantage of favorable market conditions for refinancing and made the most of their investments during a bull market. Sacrifices and trade-offs. Paying off a mortgage in under 8 years requires significant sacrifices and trade-offs. For nearly 8 years, the homeowners made conscious decisions to save rather than spend. This included foregoing some vacation plans and delaying home upgrades. However, these sacrifices were temporary and were made with a clear understanding of the long-term benefits. By prioritizing debt payment over short-term pleasures, they were able to achieve financial freedom much faster. Emotional and psychological benefits. Finally, the emotional and psychological benefits of paying off the mortgage early cannot be overstated. Achieving this goal provided a sense of security and peace of mind. The homeowners now have the freedom to make life choices without the burden of monthly mortgage payments. In conclusion, by refinancing wisely, leveraging career opportunities, living below their means, and maintaining a long-term focus, the couple were able to pay off a $450,000 house in under 8 years. If you found this video inspiring or helpful, please give it a thumbs up and subscribe to the channel for more personal finance tips and success stories.